Should be good to go on YouTube as well. Let me just get my own recording up and going. Right on. My name is Mirza Catic. I'm a trader here at Simpler Trading, and I'm super excited to talk to you folks today about risk reward and how honestly, oftentimes it does get misconstrued, especially in the heat of trading. And we can often think that we're doing far better than we actually are in our system because you have to think one, two, three trades. That's not enough when we extrapolate out our system across 50, 100 trades. A lot of the stuff that we do on the micro level becomes a lot more apparent on the macro level. You caught meta near the low. Nice, Nancy. Good job. Let me get this up. So yeah, I did want to start out the lesson plan with a pretty cool thought exercise. So let me just get this screenshot over here. So hypothetically, we'll start off with two systems of risk reward. We'll kind of break both of those down, and then I'll present an optimal middle that I'm kind of shooting for when I'm operating my own trading system. So should be a good thickness. So we have system one, and then we'll dive into charts and everything as well, going over this. And system two. System one has a 1-to-1 risk reward. So if you're risking $100, you're looking to make $100. System two has a 1-to-3 risk reward. Okay. So objectively, before I apply the hit rate, and I'll go into what hit rate means, we would like to risk $100 to make $300. So I'll be applying a hit rate to these systems, and then I'll give you folks like 10 seconds to answer. Okay. So essentially what a hit rate is, it's a percentage of your winners versus your losers. So if you have a hit rate of 50%, out of 10 trades, 5 are green, the other 5 are red. So for system one over here, we have a hit rate, which is a pretty exceptional hit rate of 80%. System two over here, our hit rate is, I'm building up some suspense, 40%. Okay, system one or system two? Got like 8 seconds now. Okie dokie. 10 seconds are up. At the end of the day, both systems, they do. Oh, is it not showing this? 1 second. Hi, your screen is black on Restream. Can you make sure you're sharing your screen? Okay, well, that's unfortunate. Give me 1 second, team. Okay. I think it should be sharing now. Am I good to go? Share your screen and then enter studio. 1 second, my friends. I definitely thought I was good to go on YouTube as well. My apologies. I'm good to go now? Right on. I appreciate it, Brenda. I do not know why this is not dragging into my screen though. Um, I have kind of a picture I'm working through, but okay. Well, regardless, we'll keep it rolling. I'm basically working through system one and system two. System one has a, let me see, is there a drawing tool on here? Yeah, regardless, I think I could do a text box. Okay, so essentially what I was doing is system one has a 1-to-1 risk reward with an 80% hit rate. So that means you're risking, let's say, $100 to lose or to make $100, and your hit rate is 80%. So out of 10 trades, 8 are winners, 2 are losers. And system two is a 1-to-3 risk reward with a, or an A. We'll do A because we did and the other time, even though it's not really proper English. 40% hit rate. So of these two systems, which system would you folks kind of go with? Let me see. System one or system two? And I can provide you with the YouTube link. Just give me 1 second. Mm-mm. Okay. So at the end of the day, both systems represent about 6R of reward. So if across, let's say, a 10 trade sample size, you hit 8 of them and you lose to two, you're up 6R. Over here with a 1 to 3 risk to reward, of the 4 trades that are winners, you get 12 reward units. And then of the 6 that are losers, you subtract that from your 12. So, kind of was a trick question. But, both systems come with their own kind of psychological, I guess, psychological measures that you have to approach to be able to execute upon those systems correctly. So that's kind of what we'll be diving into a little bit here. So the 1 to 3 risk reward system, that one is a little bit less common, and simply because you have to have it's a little bit more psychologically challenging, because implied within the system with a 40% risk reward is the fact that you might be taking, one, two, let me see. This is going to drag over because yeah, I don't know why it's not showing other screens when I drag them over, but regardless, um, you have to be willing to take 1, 2, 3 trades in a row that are losers. And then when you do get yourself in a position, let's say where you're in a winner, this was a wonderful trade earlier in the week on Tesla. Can you sustain? So let's say we're coming down into this level. We're looking to risk about 262, break a low a day. So that puts us at $1. Are you able to sustain a move up to one, let's say 2R, back down to 1R, to finally make it up to 3R for a little bit before it's back down to 2R, to potentially look to then continue and go and maximize the trade? That, especially after a string of losers, is really hard. And there is, and I'm speaking from my own experience as well, a proclivity to be in the trade, be up 2R, hoping that it goes to 3R. And then when it comes down right here and doesn't do it, you're like, and sometimes maybe you do execute on the trade. You get out of it, you're out at 1R, 1.1R, whatever it may be, 1.5R, effectively compromising the system, because your system, its profitability was based on the fact that regardless of the losers, when you do get to a winner, you have to be able to maximize it. And again, it takes, a larger time frame to do it. So for me, I'm on the 5 minute. For it to have expressed itself appropriately, I have to be okay with being in the trade for, let's say, 30 minutes, an hour, 2, 3 hours, and onwards, versus, let's say, a 1 to 1 risk reward system with an 80% hit rate. If I'm coming in here buying this level, as soon as it's basically popping up to this level, I'm looking to maybe start trimming. And even before that, let's say when it's down here, as it's popping up, nice hammer candle would be forming at this point. We're starting to lock at 80 cents. It rejects, comes back down. And then as it's pushing up into, 264, we take our lock at 2R right there on the second layer. So the second layer is at 2R. The first layer was at, let's say, zero point 0.6. We're looking at 2.6 between the two shares, or two layers. Divide that by 2, we're looking at about 1.3R. So that type of trading is what I did for a while. But what was extremely frustrating for me is the fact that I would hit this, I would do it well, I'd be up, and I'd feel like the guy, right? Before before this presented itself, when price action was still live around here, I'd be like, Mir, this is wonderful. This is good trading. We need to rinse and repeat this. And then as the day would continue to progress and all of this would happen, then I'd start like scratching my head, honestly, a few times in the beginning when I was trading, like just like losing my mind, as seeing those contracts that maybe I was in at 3, locked at 3.5, locked at 4. I'm like, oh, right on, a few $100 on the day. And then they go and 10x the contract that I got in that was worth 300 US dollars is worth 3,000 US dollars by the end of the day. And then in an attempt to fix that, I tried to, go the other route. So I was trying to apply the 1 to 3 risk reward system. So that put me in a spot where I'd be getting in and I'd get into trades. And even when they were expressing themselves, let's say to 2R, 2.5R, even sometimes to 3R, I would still stay on holding, really wanting that, longer term expression. But plenty of the trades would get up to 2R. And then let's say right here, they start to fail. In this case scenario, it picked itself back up and went up. But many of those trades would then kind of come back down, stop me out at flat. Or if I, decided I was a bit stubborn and didn't move my stop, I'd get stopped out for my full position. So then I was up 3R, and to have that green of a trade then go red against you, I also think that's inappropriate. So trying to find a balance between trimming too early and then selling too late is kind of where the system that I'm working on applying right now is about a 60% hit rate. So it's between the 40% and the 80%, but the risk reward is roughly about a 1 to 2.3 to 2.5. Having a risk reward in that system, and I'll kind of go into how I apply it in real time, it allows me to not only secure profits when the market does, confirm my hypothesis, and it moves the market in that direction of my hypothesis, but it also keeps me in the running when a trade is looking to express itself a little bit further. So I'm able to stay in the trades for longer, and the trades that don't express themselves longer, I'm not just fully giving back all the profits essentially. So how that works in practice is when I get in a trade, I do my best to the first layer. I try to lock at about 1.8 and 2.2R, kind of in that range. So if we're coming down here, pops back up a little bit, let's say we get in at 262, our true risk is below both the PMZ, low a day is right there. So if it flushes, realistically, we're giving it a buck of risk. So from 262, 263, even though that looks like a good move, and I do have still somewhat of that impulse, like, hey, maybe we should trim a little bit. The market, is in favor of our trade right now. I don't do that anymore because with the system that I'm trying to run, that's not an appropriate way to manage risk, particularly when the trade has the potential to do all that. My first lock I try to do is around, like I said, that 1.8 to 2.2 risk reward area. So by doing that, that anchors my perception a little bit higher because when you do trim super early, now you've anchored your perception down here to where it's like, hey, if this is a good area to get out, this is a really good area to get out, effectively shrinking how you're seeing the overall trade express itself. But when you sit through this big push and it comes down and your mind is like, damn man, like what if this comes against me and stops me? And you're like, hey, that's doesn't matter. That's not the trade. That's not what we're here to do. Comes back up, moves, and it's like, okay, you finally lock your first layer, and now you can sit through this. Typically, when I'm up about 2R, when the trade expresses itself to 2R, that's when I move my stop up from that initial 1R stop to break even on that remaining layer. And that's how we get that 60% hit rate. So that's how it moves from the 40% that the 1 to 3 system expresses up to about 60%. So that is I'll I'll get to your question in a second, Nancy. And that's kind of how that works out because now if it does come against me and I do by giving it all this space to work and it does come against me, I stop at a break even, net, I'm up 1R on the trade. That's not ideal, but we're still green and we gave it all the space it needed to truly validate or invalidate our hypothesis. And then let's say you lock at 2R and the trade does express itself up to 3R. If you want to lock there, that's perfectly okay because that's the system. First trade is 2R, second trade is 3R, averages out to 2.5R. That's kind of what we're shooting for. However, when you do lock a little bit higher and it is expressing itself in this manner, you do have a little bit more wiggle room, a little bit more breathing room to continue to sit in the trade. My average trade time, like last year, I was probably in trades between like two two to like 12, 15 minutes because I was trading on an even smaller time frame. I was trading on a 1 minute and looking at 5 minute and 15 minutes. And now that I'm trading strictly off of a 5 minute chart, reducing the noise, and then looking, of course, at larger time frame charts like daily, etc., that is helping me now move my average time that I'm in a trade from 2 to 12 minutes to about honestly like 25, 30 minutes to a few hours. And that's a whole different set of psychology when you're talking about being in a trade, sitting in a trade, having the trade go for you, against you, for you, against you. Let's say different variables in the market are changing. It's like, okay, I'm in Tesla, and back here when Tesla was bouncing, SPY was bouncing too, and so was Apple and Amazon. But now Apple and Amazon are looking a little weak. It's like I'm not quite at 3R, but I want it to get to 3R because I locked the two. I don't want to sell too early. Like the market looks like it's turning. What do I do? That's a whole different, mental system that kind of expresses itself when you are giving a trade that additional space. And that's something that's honestly it's super cool to work through. That's the human aspect of trading that we're all here to explore. There's a saying in the trading community, and it goes that most people learn more about themselves from a year of trading than most other people do in their entire lives. And that's because of initially, especially when you're starting out trading, the roller coaster of emotions and of the particular beliefs about money that have been imprinted in you that are all getting absolutely scrubbed by the market. So, and then I don't I don't plan on covering it in this lesson plan, but something that I've been pivoting into and becoming aware of is not just getting into trades and managing them, but and this is some higher level stuff, but it's how can I get larger in the best trades too. So getting larger is a little bit hard when you sell too early because again, the perception is anchored lower. Now you don't have as much wiggle room. If you're willing to allow itself to express it, sell, you can start to position yourself deeper into the trade for that momentous move. And that's where you have that massive skew helping move your system forward. So that's kind of where I'm oriented in my own trading is not going for the quick kill anymore because that's what I used to do. It's like I'm in, I get in a trade, it's a nice scalp, and it's like, okay, let me take this off, let me get this win, let me move on to the next trade, let me get that nice positive reinforcement. And at the end of the day, well, the profitability was there. I would see myself again hitting that 3 to 4 move, the 3 to 4 5, and then my friend over here that I've been trading with a long time, he's like, "Oh, I hit the contract 4 to 15," and I'm like, "What? How? Like, what did you?" We were trading the same thing, but it's like my system at the time didn't even put my perception in a place where I could understand the ebbs and flows of the market in a manner that it's like, "Hey, it's okay, Mir." It's like, "Hey, okay, it moves up, it moves back down, it moves down a little bit more aggressive." It's like, we want to lock." It's like, "Hey, that's not appropriate. That's not our system. Let's move." Let's stay in the trade. So that's something that I did want to I wrote it down over here in my notes, and it's your system for risk management will act as a filter through which you perceive market opportunities. So if you're okay with taking quick trims, quick trades, let's say base hits, you will consistently see that being expressed in the market over and over and over. If you're someone who has no interest in, let's say, those smaller intraday trades and you're looking for those larger swings, those larger trades, you will consistently be shown opportunities that fall within that risk reward system. Me, for myself and my personality, I do like to participate every single day, but not in the manner that I used to, where I'm scalping and missing out on the true move. So, my middle right now is the one that I expressed where I give it space, I fight that, and I don't want to say fight because you don't really want to fight the feeling. You want to allow the feeling to you just want to feel it when it's there, that impulse to kind of take off the trade early, understand that that's now no longer appropriate for what we're trying to do, and letting the trade express itself and then executing accordingly. And yes, there will be trades that it does go up in R, maybe 1.2R, and then it comes down, consolidates, and stops you out. And in that moment, that old part of you will be like, maybe I should have locked, trimmed. It's like I could have moved my stop up a little bit early. I don't really like to think like that anymore because again, that also is compromising the integrity of this system. And then you find yourself constantly floating between different methods of risk reward that then, over a 10, 20, 30 trade sample set, it's like you're consistently undercutting yourself and not moving the account forward. So can get to some of the questions here. Does the system no, Nancy, the system so your edge is your edge, right? So whether you're using price levels or this indicator or that indicator, that is irrelevant. When you get into the trade, that is what I'm talking about in terms of risk reward. Because let's say you do an hour of prep, this EMA, that it's at this particular Keltner and it has X amount of squeezes. That's all fine. but the arena completely changes once you finally enter the trade. And once you finally enter the trade is where the most important part of trading is. And it's where honestly the really profitable and extremely profitable traders separate themselves from everyone else, because so many people do understand technical analysis and the regular ebb and flow of the market. It's just when we get into a trade, we get so consumed by the emotions, by the market just doing market things, that we start to make decisions that aren't aligned with the profitability of our system over time. And for me, JC, this is my watch list right now. So basically between, one second. One second. Okay. Yeah. So for me, tech has been extremely hot. So this is kind of the watch list that I go through. And, each day I'm playing any any variation of these names. Carvana and AI, those I don't actively play, but just something that I keep an eye on. One of my friends does more actively play it. So I like to just kind of understand and learn what he's doing with his system and these particular names. But yeah, mainly large cap tech, and just rinsing and repeating the system and playing them. And what helps when you do play a similar basket of stocks over and over again is you start to kind of develop and understand a little bit of their nature, and how between days they move. It's like, hey, yesterday Apple and Amazon were moving in tandem with each other, even when the rest of the market might have been a little bit reluctant to move up. And then it's like you come into today and there is a little bit of a divergence. Like maybe Apple's looking a little bit weaker, Amazon's not. So it's like that kind of helps play into the overall story that is the context behind the trades that we're taking and the amount of space that we're giving each trade, as well as if the trade, because not every trade deserves to be sized into more, right? There are plenty of trades where you're going to get in, and then while the trade's expressing itself, you won't really see it as an opportunity. Let's say it's between a supply zone and a demand zone. It's like, hey, I'm not really looking for a grand slam trade. This can go either way. I'm just looking to kind of take off. But there will be trades. What was Tesla actually yesterday? Oops. Came down nicely into this demand zone right at the beginning of the day, micro touch, and then boom, absolutely accelerated the entire day. Those are the types of trades off the best levels with the correct context, with the overall market supporting your thesis that has the correct context, are the trades that then we look to try and maximize, add to, and really, really push our psychology. Because for me, the most exhilarating trades are the ones that I get in, I trim, I get in more, and it continues to work. So you've already locked up your risk. There's no chance that you're going to be red on the day. You're continuing to play a hypothesis that, was your brain baby at one point in time, and now it's expressing itself in a manner that's lining the pockets of your account. And it's like you're continuing to add more size to it. So it's continuing to work better and better. And that's honestly one of the best places that you can be. Just being in the driver's seat in a green trade is incredible. But then when you get to the point where you're also adding to the green trade that you're already in and it continues to work, that's trader heaven. And that is where I'm trying to reside as often as I can in an appropriate manner. So let me see. Okay, yeah, one thing I did want to touch up on, especially in the heat of battle, and I'm trading options and stuff too, so there is a little bit of additional skew there as well. But it's super important to truly understand what your actual risk is. So coming into this day, let's say if I was risking the PMZ, I believe it's like 58 cents, right, of risk that I was initially looking to take, like 60 cents, say, per share. And then if you're doing options, that just gets scaled up. But what is the actual risk? Before it gets here in real time, you see it didn't quite touch it. And if you didn't bottom ticket, realistically, you're buying up here a little bit. And then in the hypothetical scenario where it does come down, realistically, you're not going to sell right as it breaches the zone, because low of day is right here. Low of day is right here. Low of day, pretty high probability that it might get some type of sponginess. It's going to bounce up a tiny bit. So then you decide it's like, hey, it's probably appropriate to give it to low of day. And then if it does, in that hypothetical scenario, breach low of day, it's not going to be like, hey, okay, I'm about to breach low of day. I'm going to give you a chance to get out of your trade. oftentimes it's a pretty aggressive flush. So if you're not quick on the trigger, you're also eating additional risk, let's say down to that, 261 area, maybe even more. So I really encourage you when you're analyzing your trades and you are being a little bit lenient with like, oh, it doesn't have to be right at the level. Let me get in. And I fully agree. Don't be, a D for a T. We've all been bred here at Simpler to understand that and to kind of integrate that into our style. But then if you don't get an optimal entry, that is where then you have to understand how much you have to wait in that trade to actually get the reward that's appropriate. So that way, over time, your system is one of profitability. But yeah, I think that's basically it for the lesson plan. One thing, just a quick thing that I personally love when I'm getting into trades and it helps me tighten up my risk reward is if I'm already going to risk into an area and let's say this move does flush into it, those are my favorite buys because if I saw this area as an area that I was willing to risk off of and the market in real time gives me a flush into it, I personally love those trades because then it's like, hey, I can just stop out in the same spot that I wanted to with maybe even half the risk. So, and particularly with options, because when you're getting into an option, it's leveraged 100x, but then you also have pricing perception. So if a trade is accelerating to the downside, they'll start to skip the ask and the bid up. It might be harder to get a fill. They'll expand the spread, even harder to get a fill. The market makers will just start to manipulate the price of it a little bit. So that's why, let's say, if we're going long there, I love buying into moves against me because not only am I getting a better price on those calls because price is moving against my hypothesis, but also the perception that the Tesla, let's say, is going up isn't priced into it. It's actually the perception at the moment is that it's going down. So I get a super good play. And then as soon as Tesla stops and potentially pops the other way, not only do I get the relative gain on my contract, but also that IV inflation about that perception shift is also then built into the trade. So those are my best trades is when I can really time the entries, and that's where the risk reward is extremely tight and where the 4 5 6 r trades kind of come from. So I think as far as the lesson plan goes, that is it. I will kind of stop my recording over here and then I'll open the floor up to any questions if we have any. Try to get over to have YouTube up. But yeah, if we don't overall have any questions, that's how I've been approaching it. So if you folks are looking to hit those, longer, that's completely appropriate. If you folks are looking to kind of be in there and scalping, that's completely appropriate. Especially, with that hit rate, correct? I just really encourage you, particularly in the market environment that we've had, let's say for the last few weeks, few months where things are trending, you really don't want to be locking something at, a slight gain when you could have just sat back, taken your hand off the mouse and had the best trade of the month by simply just not doing anything. So let me look at the chat over here. No picture, black screen. Okay, got that set up. Yeah. So I appreciate you folks. Thank you for your time. Thank you, JC. Thank you all the people who showed up on YouTube to watch. And definitely excited to hop back on and do some more videos. So thank you folks so much, and I will be talking to you soon. Bye bye.